the smart money likes the S&P because it's market cap instead of price weighted like the Dow, but still it's 30,000 and it's a round number.
It certainly is. Stocks are really off to the races here. You wouldn't know that we had this virus, the COVID-19, really surging and, of course, increasing restrictions. Traders really looking past the optimism of the second half of next year when hopefully the vaccine is really moving through the economy. So here we have the Dow sharply higher, above 30,000, as you talked about, for the first time ever. Doesn't really mean anything technically, but it's a big round number, psychologically important. Folks generally like that, and we see stocks climbing even more once the Dow did rise above 30,000. Right now up 1.7%. The Russell 2000, another all-time high, really leading the charge, up 2.1%. The S&P 500 up a solid 1.5%. And important, Taylor, the cyclical reopening rotation that we've had happening in recent weeks, usually, often it comes at the cost of tech, but that simply isn't happening today. The NASDAQ 100 today is up 1%. So this is really a Goldilocks cyclical rotation right now on the expectation of a normalizing economy. And, I know that you and others have been talking about whether or not it's going to last because we've had these pockets of it on, off again throughout the year. Well, if we take a look at the sectors on the month, Taylor, it does suggest that this cyclical rotation is really very much on the way. Take a look at energy, up 30%, heading toward its best monthly performance ever. That is the FOMO-like buying we have around energy, but it's also for the other cyclical sectors such as industrials and financials. So we really have stocks off to the races in this holiday shortened week, Taylor.
And it's interesting, Abigail, as we talk about the reflation trade and the outlook for politics as well going forward. We're taking a look at bond yields, also up 3 basis points on the 10-year, 5 basis points on the 30-year. That goes into that cyclical theme that you were discussing. The outlook for bonds here with yields rising, part of the reflation trade?
Well, right now you can make the case that bonds are at the perfect Goldilocks level because you have bonds, the 10-year yield and specifically still in this year's range below 1%. So stock investors don't have to worry about yields going too far, too fast, which would, of course, bring into questions around valuation and discount rates and all sorts of other repricing of risk issues. But you also have bonds at the higher part of the range. So it brings in the specter, the idea that reflation, the perfect amount of reflation is right ahead. So long as the 10-year yield stays below 1%, it's a pretty healthy spot. It seems that's what stocks are telling us right now. Above 1%, above 1.25%, it could be a different story. But right now, bonds are a part of this, yes, reflation trade.